Good evening. This is Ken Long from Tortoise Capital Management, July 30th, 2009. I'm going to take a look at the fourth of our four intraday trade candidates that came out of last night's daily trading plan and preparation. In this case, we're going to take a look at Merck Pharmaceuticals, symbol MRK. It's a stealth trade candidate, and we're playing a continuation pattern. A stealth candidate is a stock or an ETF that has been horrible 2 months ago and slightly less horrible last month, which means that it's been quietly improving with respect to its peers in the Dow 30 or the S&P 100 or the ETF 100. But it hasn't come to anybody's attention yet, so we call that a stealth trade because we're getting in early before the headlines. Merck has been great for the past week. It continues to march up. It's probably no longer a stealth candidate because it's been outperforming. So we're really just continuing to play daily momentum. The market had been overbought for the last 10 days and pulled back slightly yesterday. We're looking for a continuation play today, which means that if the market is up strong and if Merck is doing well, then we can get long in the second position, meaning that we're going to wait to see evidence of price continuing to move north. So what we saw at the open was that Merck gapped up, sold off like the rest of the market hard for about 10 minutes. We see our first green candle. Because it only had one red candle, I waited for a second green candle to be my setup bar. And then I buy a penny above that second green candle, placing a stop 10 cents away at the red line. Merck just takes off and never looks back. In less than 5 minutes, price is at this yellow line, which is where we raise my initial stop from the red line to the green line. And once again, in less than 10 minutes of open risk, we're at the no-lose position, meaning that the worst thing that can happen to us from here on is that it scratches and we get our money back. But in this case, Merck just continues to march and it continues to go. It gets up to almost $31 a share. So we're holding a 4R at this point, meaning that we've earned $4 for every dollar of initial risk. Because the market was so strong and Merck was so strong, I stayed a little bit longer in this one, got punished for it, and gave back about 30 cents. But ended up netting about 3R. Merck continues to fail and fail and fail and drifting back down. It gets to about, I would say, a 50% retracement of the initial move, and then we try trade number two. We see about 15 to 30 minutes worth of sideways congestion with low volatility. Starting to see some green candles. I'm starting to see it break out. I buy a penny above this hammer. With an initial stop here. At the yellow line, we'll move to no lose. It goes up to about 30.60, drifts sideways, drifts down, drifts down, drifts down, and then we're out for a fractional R win, about half of an R. Merck continues to fail. It comes down. We see this. I see this green candle. I venture a penny above. It turns around and fails quickly, so I'm out with a 1R loss. So we've netted about 2.5 R for the day on Merck. It continues to fail into the close. And because Merck was not able to maintain its initial burst, my sense is that it's closer to the end than the beginning of its stealth move. And so maybe the cat is out of the bag and it's starting to get tired. So I decide I'm not going to venture to hold overnight. So what we have here is a series of trades in Merck based off the initial proposition that we could buy strength or tactical momentum in the second position, and then look for opportunities to get back in when the conditions are proper. So we end up getting 3 trades, netting right around 2.5 R for the day. So that's the stealth continuation strategy using symbol MRK or Merck on July 30th, 2009. Thanks for your attention.